Hello, this is Chris from Tradesight, and I wanted to take a few minutes to walk you through a momentum move that occurred on Google on Friday, the 6th of June 2014, and how we were able to use a combination of our teachings here at Tradesight and the powerful eSignal 11 platform to sort of plot a target point. And we go through in our 6-month training course on how you can use various entries and use this information, but we can give you a real good example here today of exactly how that measured move plays out and how you can sort of gauge where a certain stock's going given a gap and release setup, which is what we had this morning on Google. So I wanted to walk you through it real quick and show you what we did. So here's a look at the Google chart. This is the 5-minute time frame, and you can see the big gap up from the prior day's close. And what we do is when you see a sharp sell-off in that opening bar, that's what gives us the energy to predict and project what I'm about to show you. So the fact that we dropped so sharply is what got my attention. And what I did was I used the Fib retracement tool, the Fibonacci retracement tool, and I set the opening price as the top of the tool, and then I drag the tool across so that the 50% line is exactly at the prior day's close. And what that does is it extends the zero line all the way down to an equal and opposite move in the other direction. So from where we opened today to the closing price of the prior day, that distance is the exact same distance as from the closing price to this zero line. Okay. We've also got two other key lines that are starting to form on the charts, and that's called the Tradesight Pressure Thresholds. That's the red line you see up here and the green line that you see down here. But what initially gets us started on this trade, what brings it to our attention, is the gap and the strong initial bar. I mean, it didn't go barely more than a couple cents higher than the opening price, and it sold off sharply. And for a lot of newer traders, that's going to be, they're looking for the gap fill, right? They're looking for the stock to come back and fill that gap. And that move happens so quickly, they feel like they've already missed their opportunity. But what they don't understand is that that price action sets up the energy for a reciprocal move. So what we're going to do here is use the powerful bar replay mode in eSignal 11 and go forward bar by bar and show you what ended up happening from this point forward. So you may hear some sounds if we get certain alerts that set off. But here's a point where we've filled the gap on the stock for the day. And you'll see us settle briefly into the range between the 61.8 fib and the 38.2 fib. And look how precisely we set that level. Okay. But remember, the key here is that after the opening bar, we believe that we've got the energy to take us all the way across to the zero line. So let's keep going and see what happens. And at this point in time, you're short the stock, you've got a real obvious point to put your stop, which is on a held move above the 61.8% retracement. So it's a low risk trade, even though you're in Google. It's a low risk trade on the stock. And then as you can see here, now we're starting to break lower, and the next bar takes us right down to that zero line. Okay, so there it is. I mean, based on that initial energy, we really felt like, and look at the big volume on the first hit, that we have the energy to go all the way down and reciprocate the move that you have from here to the gap fill by going lower and going from the gap fill all the way down to here, and that fills the move. And in this case, on Google, from the high to the low right there, 558 down to 549 and change, it's 3 points, 3.5 points. And even from the entry point, which we took up in this area, it still gets you, several points. I'm sorry, 558 down here is 8.5 points, but from this area right here, 554.87 down to here is about 5 points, and that's still a reasonable move to get off of a Google trade. Now I'm going to go a couple of bars forward from here. You'll notice that we actually do go a little bit lower. We hit the lower pressure threshold right here, and we get a bounce off of that. And then let's see how the rest of the day plays out. I'm just going to jump forward. I'm not going to go bar by bar. And you'll see at the end of it all, it was like as if the move never occurred. We retraced back up to where we had closed the prior day. We flatlined out. This is on a Friday, and the market got very flat. And the lower pressure threshold ends up basically being the low of the day. So you've got an energy move and the lower pressure threshold that holds the stock in place. And at the end of it all, the stock moves back up here, flatlines out. Looks like nothing even happened, but we had a really nice winner today. And this is something that we teach, both the reciprocal moves and the energy that comes from those moves, and a variety of ways to make money off of those moves, along with the pressure threshold lines, which are so powerful in containing the market on every stock every single day. We teach those in our 6-month mentorship program, as you see on the eSignal website.